Welcome back to the Deal Vault podcast. If you're a real estate investor looking to scale, secure funding, and learn from real deals, you're in the right place. I'm Greg, and together with Nate and Sarah, we'll sit down each week and break down market trends, funding strategies, real deal stories from our investors. Now, if you're ready to unlock knowledge, relationships, and capital you need, let's open the vault.
Welcome back to the Deal Vault podcast. We're here today just to talk again with real estate investors and give tips and feedback on your investment property loans. We have one of our team members, Adam Rawlings, with us here today. We're really excited. Thanks for joining us, Adam.
Oh, happy to be here. Absolutely.
Welcome, sir. We're going to start this with some real, super serious real estate focused questioning. Would you rather only be able to speak in rhyme or only be able to whisper dramatically for the rest of your life?
Real estate. Do you get extra credit if you do both?
Ooh.
No, you must choose one only.
I'm just such a loud guy, and I'm actually incredible with rhymes. I'm gonna rhyme all day.
Rhyme all day.
If I may.
You may, because the would you rather says so. Sarah, what about you?
I think I would. I'm not very good with rhymes, so I would probably go with dramatic whisper. I think that would be awesome as well.
Could you could we get a little dramatic whisper? Like, could you show it?
Ooh, this is very serious. I don't know.
And you know it's serious because she said so. That's how you.
I'll work on it. I'll work on it for next time. But
I think with rhyming comes cleverness. So I'm gonna go. That would be my choice of the would you rather.
Yes.
Dramatic. I think you could still yet dramatic whisper on demand. It would just be in rhymes. So I think you could have the best of both. So
Yes.
I would take the cleverness. So now that we've really gotten into real estate on a deep level, we can go into the other stuff. Glad to have you on, man. What's your deal? How'd you land here? What's real estate to you? Loans.
Yeah, loans. I mean, for me, real estate's fun, right? Like real estate's one of those things that's it's different. It's allows a whole huge eclectic group of different individuals to succeed and do it together if they choose to, right? So I've known investors, real estate agents, got into the financing side of things several years back. As an actual loan officer, right? Having to take it super serious and do the education and take the test and make sure that you're following all these laws that are great and serious and important to protect people. But like if you mess anything up, like it's a big deal.
Yeah.
And so that's great. One of the things we focused on when I first got going is like we'd get a lot of people their first home. Right. So that's cool. That makes you feel great when you can help somebody through that.
So for context, that's when you were doing conventional lending.
Conventional lending, doing that way, completely, really different than what we do here. But, just going down that road of, hey, figure this thing out. I've always been a big math guy. So numbers come easy to me. So that's kind of just what I can bring to help people. Always super personable guy too, obviously. And you bring that together and you're a perfect loan guy.
Boom, connect the dots, done deal,
Yep.
perfect loan guy. So you did conventional and now you've made it to the wild, wild west of private lending. So I think what we'll talk about today is what's the difference? Are there any? If there are, what are they? I think the reason that this is a pertinent conversation, I'm glad to have you here to talk about it, having done them, done the conventional loans, is I am always surprised at how many people still don't know about the private institutional lending industry, business purpose lending, DSCR, fix and flip, et cetera, and just only know conventional, which frankly is pretty reasonable of them. But this industry is pretty ubiquitous now. Like it's the real deal. It's executable. It's doing, I don't even know, billions a year with a B.
Yeah.
Huge. And yet still there are so many people that, number one, don't even know about it, let alone the differences. So maybe we can do a little bit of education on what is this, what's the difference, and the benefits and pros and cons to
Yeah.
both. I think you're the perfect guy to show us the way, sir.
Oh, for sure, for sure. Yeah, one of the biggest things, and I tell this to borrowers all the time doing what I'm doing here, like one of my favorite things about what we do here, and the difference from conventional lending to, kind of the private money and like the investment,
Is fun, of course.
of course. So it's a blast, right?
Yeah.
But
Love that.
it's oh, man, there's a whole lot less no.
Mm.
Right? It allows you to be creative and figure out what you can do. Where like in conventional lending, it's like your DTI isn't this specific number.
Period.
Sorry.
End of story.
Yeah.
You can't do it. Or,
Mm.
it's like one of those things like, well, man, I wish you wouldn't have bought that car. You're not going to be able to buy a house now.
Yeah.
Bye, Felicia.
Buy.
Right.
Right.
Yeah.
That was when I first started looking into doing this, right? I knew some people that kind of did this or worked with you guys, and that was the exciting part to me. One, I love helping people. Two, I love figuring stuff out, right? Like I'm a problem solver. Like I like putting puzzles together. Like
Mhm.
the ability to do that is so much better than just being able to follow a chart and be like, well, hey, I know this. I've studied this. I know all this data says this. We can't help you, right? That's the biggest thing that I tell people all the time.
So I'll play devil's advocate. Are you saying then that there are no guidelines in this industry and you can just do whatever you want?
No, absolutely not. Yeah,
That's what you just said.
yeah, yeah. Hey, we're just gonna give you money. We're out here with the money guns, just making it rain, right?
That's what I thought, obviously.
Yeah.
Clearly. Yeah, it's just there's just a lot less box, right? It's a very straightforward, hard inside the box. You're either approved or you're not. With
Mhm.
conventional, and we still want to make sure that we're taking care of people, right? Because at the end of the day, I think sometimes, people can look at hard money or private money and be like, oh, these guys are like the gangsters in the old 60s movie. Man, say,
See?
for your money, and we're going to show up and get it from you,
Yeah.
take your stuff.
With our Tommy guns. Yes.
Exactly, right? And that's not the way it is either, right? There's a whole underwriting process still. But we have the ability to look and say, this deal makes sense.
Yeah.
You make sense. Like we're going to spend our time, effort. We're going to invest in you.
Go find yes.
Let's do it. Yeah. Yeah.
Well, and I think even more so, like with working with loan bids, we're also navigating all of the options in private lending. So it's even a bigger box than if they were to go to direct lender, right?
Yeah.
Which you've worked to kind of, I think, even with direct conventional lenders, is like the opportunity to support investors even more. If there is a no with one loan program, we have other loan programs even within this space too.
Yeah.
So there's just a lot more opportunity for success and support, I think, probably even within private lending as well with
Oh,
what we do.
For sure. For sure.
Yeah.
And one of the special things about us specifically too, is that, it's a numbers game, right? I get it, but nobody likes being a number,
Mhm.
right? We all like being people. Like I'm different than you're different than you're different, right?
Yeah.
So like what we do and what we're great at is people.
Yeah.
Even in the office here, there's always every place you work, there's always that person, Elizabeth in accounting, I can't stand her. That's not here. Like you guys did a great job of putting the team together, right?
Yeah.
That's the same with the lenders too. Like there's going to be lenders that have a box similar to conventional, but we've built relationships. Like you guys go out and have talks with these lenders all the time to build relationships with a wide scope of different ones that their box is different.
Yeah.
I have an appraisal here that this person doesn't like.
Mhm.
I have a deal specifically. Great lender we work with all the time. This one little thing didn't work. We were able to pivot, still get, the borrower what they needed, got it done.
Right.
Perfect, right?
Yeah.
Like that's what we do.
Yeah.
But if you're working with a single lender or conventional, you can't do that.
For
It's just sorry.
Just as a matter of fact.
sure.
Yeah.
So coming from conventional, though, I'm sure there were some differences, that you had to kind of retrain your brain on. That for an owner occupied property, that's not a big deal. But maybe coming over here, what were maybe some different things for people that are wanting to transition from conventional financing that they should be aware of? We're not looking at the DTI stuff anymore, but what are some of the other things that you kind of had to switch your brain into focusing more on to be able to educate investors that maybe are coming in from the conventional side of financing.
For sure. So, I mean, one of the big things that, when we're initially talking to somebody in conventional financing, most of the time, which is funny because this is probably maybe who we deal with the most of the time, if they're self-employed, it's going to be tough.
Yeah.
Because then you're opening up a can of all the tax return worms. And right. And I don't know how many times I told somebody, it's like, I get what you're doing. You're a successful business person. I'm not saying you don't make money. You're good at what you do to limit your tax liability.
Yeah.
But it shows that you can't afford a home.
Right.
Nobody likes tax return worms.
Nobody.
First time I ever heard that. I love it.
Tax fishermen,
Tax.
yeah,
they would love it.
they would love it. But yeah, so it's one of the, the initial thing right there is like, hey, where I'm used to like talking to somebody and thinking, like batten down the hatches, we're gonna have to like figure out a way this one. That's no big deal.
Yeah.
It's not even a thing.
It's not even a thing. You don't have to worry about it at all. Like you expect it almost, right? Condition of the property.
Oh, yeah.
Oh my goodness.
Yeah.
And it's like, it's not just like a thing with DSCR even. Like even DSCR is more lax than conventional financing to live in, especially when you're dealing with like FHA
Yeah.
loans and stuff like that. I mean,
Chip paint.
Yeah, you got to get that fixed. And sometimes it would be, one of those things like, well, who's going to pay for it? Seller doesn't want to pay for it. Well, the buyer doesn't know that they're going to still get it.
Yeah, I don't own this house.
And then you got to get the appraisers back out there. And, so
Who are
time,
always great to work with, of course. Always.
they're always understanding.
To be clear.
Never want, so much more additional fee. But, and then one of the big things too that people don't realize is just time frame is
Yeah.
so nice with what we do.
Yeah.
Like I can't think of the amount of times that we're like, hey, we have to close it this month or else there's going to be this huge issue from a standpoint of, going into the next month and then bank statements and like, can we get this? And it's like, oh, well, we missed this number here on the paperwork. That's going to be at least 3 days trip,
Yeah.
right? Like we
Yes.
can't,
Yeah.
you can't go around that. We have to resend this doc. We have to wait at least 3 days.
Yeah.
So it's like, can't do anything,
Yeah.
and then the seller's upset and they're like, well, we're not doing this anymore. And it's just,
So what you're getting at is actually really important because we do, I think, pretty regularly get borrowers pretty upset that, well, this closing statement didn't show up 3 days early, et cetera, which it's nice when that can happen. No doubt there's benefits to that. But what I heard you describe, because I've not I've received conventional loans on my own. I've gone through the process many times. I've never done one as an originator. But when we've got that closing statement, we have to provide that to you, the borrower, how many days in advance?
3.
3 days in advance. And so if there is a last minute thing, which, hey, that happens in lending, just period in lending.
yeah,
It's nuts. Real estate's crazy. There's a lot of stuff that has to arrive at the same exact moment. And if one thing gets missed, like stuff has to happen. In our space, cool, we just adjust fire. Here's your closing statement, even if it's within the 3 days. But there are other people involved, including sellers or another lender that needs to be paid off and you're in default interest. But if you're doing that conventional loan, that 3 days, I mean, can lose a deal, or at least people threaten aggressively to lose a deal is usually the case. And it still goes through because nobody wants to start a whole process over with somebody they don't know.
for sure.
But default interest for even a few days can be a significant number. Whereas in this industry, you're not forced to press that 3-day by law reset. We can just adjust, get you a new statement. Yeah, it might be closer to when you're actually signing it.
Yeah.
Sometimes it happens. We just balance this as you're signing. Take your time and review it, please. Call us if you need to do that with somebody.
Yeah.
But there is a benefit to that of not having to say, it was a change. I don't want to go to jail. You will wait 3 days.
Yeah. I mean,
Right.
it's like, yes, it absolutely has this benefit. You want to make sure the borrower knows what they're getting. But like, let's think of like even your favorite breakfast food. You have a big breakfast. It's nice to have that. Can you imagine having to eat it every morning? Right? Like that's it. It's nice to have a period of time. Can you imagine having to have it when you don't need it? Like you want that.
You'll eat it and you'll like it
Every day.
Yeah.
You will wait 3 days.
Yeah.
And you don't see it as much in what we do, I noticed, but also like it's a huge deal for, closings, like waterfall closings, like somebody else has moved out of their house, There may be 3 or 4 different people that are like without a home because this one deal,
Yeah.
and then they're having to stay in hotels and stuff like that. Not as much in this scope, right? But like it can happen if,
But
people are,
it's just a different thing. You got wholesalers,
yeah,
slash, a person that wants to move out and they can't for who knows what reason, and then there's some other lender involved somehow. I don't know. Like
yeah,
it's just a different set of waterfall things. And
Mm,
you're right, that 3-day thing. So
mm,
what we hear frequently from our borrowers is, "You're going to jail if you don't provide me this thing." Like, FYI, it's not that nobody doesn't like, people don't want to provide you that thing. It's just this industry doesn't have to do it. And so it's not necessarily going to happen. And people aren't going to stop because you feel as though a private business purpose lender must follow rules that they're not legally obligated to do so.
mm,
It's not going to happen even if you feel as though you understand the law, even though you're misinterpreting it. There are benefits to that. You can move faster. You don't want to be forced to eat that breakfast,
yeah,
even if it is a good thing in a lot of ways. Um, it can cause some late, like, hey, I'm reading this and it's a little tight. Nobody wants to put you in that position.
mm.
And really, I think in most circumstances actually works out to that benefit of we just close a little bit faster.
for
Isn't
sure.
that nice?
It's
Again. So I just know like those folks that are coming out of conventional, that's the only loans they've ever done. Hi, welcome. Like we like you. There's an adjustment here. And in many, many ways, it's a benefit. That's actually, I'm glad you brought that up. I recall going through that so many times, especially in the early years, 17, 18,
Mm.
19, so many more people coming out of conventional. And you have to, it's just like, hey, sorry, like it's not going to happen. You're not going to be rushed to read the thing. Like, let's make sure we go through it together. This is a good thing.
yeah.
What else? What else are people seeing
What
that?
One thing I thought about is like entities, right? I mean, you probably weren't doing that very often
Yeah.
at all in the conventional side. Like, not many people were quoted in
Trusts.
uh,
Like, is that a thing? You could do.
yeah, trust, but not business entities. So I don't know if for you, like talking with investors that are coming in that have not done financing over here. I don't know what is the impact or conversation been around like creating business entities, closing in business entities, those requirements looked like.
Yeah, I mean, so I think that's, yeah, we didn't really get involved in the business entity thing at all. Right?
Yeah.
It's just people trying to get their house for as little
Allowed.
money
Yeah.
possible,
Yeah.
essentially most of the time. And so, yeah, just when I'm talking to people over here with like the business entity, like I'm always just walking them through, hey, you know, we're advocating for you. Like we want to have every protection you can.
Yeah.
And I think one of the cool things too is like, if somebody is even early into that, right? We talk to people that aren't sure as well. Like you've groomed our team to be able to help them with
Yeah.
that too.
Yeah.
Like, hey, if you don't have it, like it's easy to do an LLC. Like we will help you
Mhm.
do that. And they're like, oh, really? Absolutely. Like, let's do it.
Just get it right.
Yeah,
Sweet and simple.
Well, and
absolutely.
I think one of the things too, even for real estate investors that are continuing to do conventional financing, like, yeah, like you said, we can obviously help them set up their LLC for the first time, make sure they have all the documents, but the bigger benefits are their global like debt to income and credit reporting, right? Most commonly, the servicers in this industry, they're closing in the LLC. They're not reporting it as a trade line.
Yeah.
Yes, they may report when it goes late and all of that, but for most of the servicers that are working on these business purpose loans, because it's the borrower is a LLC, it won't report on your credit.
Yeah.
So I think that's a huge benefit versus somebody who is comfortable, even if they have a W-2 and can easily get approved in the conventional world, is just the benefit of not even just the asset protection with an LLC, but the credit protection
Yeah.
and the credit capacity that it will create for them of like, hey, I'm not going to have 20 properties on my personal.
For sure.
That simplicity.
It's a
Yeah.
huge deal because utilization at that point, even if they're making bank and whatever they're doing outside
Right.
of that, like their utilization goes through the roof. So you're talking then if they want to be a real investor with scalability in the conventional space, well, we want to see you making money on a tax return with these investment properties for 2 years.
Yeah.
If we can't see 2 years most of the time, sometimes they get an exception for 12 months, but even that's quite a while when you're getting going.
Mm.
Like we won't count this towards your income at all. It's only
Only a
towards your
debt.
payment.
Yeah.
Yeah.
And so, it's like it affects everything of their life at that point, right? Like any sort of other financing they're going to try to achieve, it looks like they can't afford, even though they may have a very cash flow property.
Yeah.
Positive.
I had a buddy that I was drilling with out in California the other day, and we were looking at doing a DSCR loan for him. We actually have that new HELOC product. Oh, we're gonna get flooded here with those calls. HELOC for investment properties. Give us a call.
Yeah.
Heyo. But we're looking at that, and that product does have a DTI, which is more similar to conventional. DSCR does not have that, but we're plugging in the stuff, and he's got all these properties in the Northeast that are worth big dollar amounts. Good for him. I was really impressed. And he had gotten conventional loans. This is years ago when that was probably the better play. It's really not nowadays. I played that same game. I've got some conventionals yet still that we haven't refinanced, probably won't. But all of our more recent properties we have them on DSCR loans. This guy just hadn't made that change. He was looking to put a HELOC on one of these properties. He's accountable to that, the DTI accounting for all these big dollar properties. And we go in there, this guy's cash flowing. He's doing just fine. We'll say that. Like, good for him. He's looking to take some more money out, buy more properties. That's what we do all day long. I'm like,
sure.
it's a done deal.
Yeah.
But we have this new HELOC product that you have to do a DTI similar to conventional. His DTI was like 800% or something. It's just like, it's just like, oh, and I have not really done the conventional thing. Like, this is the first time really getting into it. I was like, oh yeah, like that's why this whole industry exists, is like I can execute on that. So we'll revisit, he's gonna go buy a house, like go do that, and then we'll go do this together. Probably gonna pull those off the conventional because he got so much equity to strip out. And frankly, when he got the rates that he had on those originally, our rates are gonna be pretty similar. And they're gonna fall off of his personal credit. What a huge lift for him and his family moving forward if they want to go buy a different property somewhere else for their personal residence or a second home, or a second home for this guy because he bought really well in the Northeast over the last 8 years. Man, these can unlock a lot when it comes to that. And it even just hit me, but like last week, like, man, this DTI thing that the conventional world has to do is quite prohibitive. For real estate investing.
And just to clarify for the world, Greg's doing well here. It's a military drill. He's not out in the oil fields.
It's drilling.
Just playing it away.
Thank you for clarifying for the world that is watching.
Drilling on the weekends just to make ends meet.
Yes.
No, one of the big things I will say too, to add on kind of the conversation here, even myself, like, you don't know what you don't know, right? So early on, I knew, oh, this is a way to connect people, maybe to these funds easier and with less, hoops, maybe. I didn't realize how comparable or competitive rates were and costs were, like origination and rates. I expected it to be like, oh, private money, hard money. Like, it's going to be way more expensive. Nah, we're going to come get you at the end of the month, Yeah. It's just not like the flexibility and the price points are there. I mean, they're right. I feel like we beat conventional even in a lot of different spaces, looking at the numbers. So it's like, I think that's maybe a thing that's out there that even somebody that was in, the system, if you will, a little bit, like, had a complete misconception of. Like, I just thought it was going to be way more expensive, and it's just not.
That's awesome.
Yeah.
That's awesome. Well, that's great, like, takeaway for investors. Is there anything else before we part today, Adam, with you that you would love to just say to all the investors that you've worked with, whether it's conventional or not, just last piece of advice for real estate investors listening that are wanting more support with loans?
Yeah, I think when I'm sharing stuff, listen, I enjoy figuring it out, right? So, like, I think in life, in work, in whatever you do, we have a natural trepidation towards things, right? If we think that something may not be perfect or may be difficult,
Word of the day, trepidation.
right?
Love it.
To shy away from it. Just try it. Give us a call. Give me a call. Any of us, like, let's talk it through. Like, that's kind of what we enjoy doing.
How much do you charge per phone call to figure deals out, Adam?
Oh, are you kidding me? Like, my rates are not Miss Cleo level. Call me now.
Call out of that. That's awesome.
But it's free 99. Yeah.
Free
$3.99.
So you can call anybody in the shop and we can look at deals together, right?
Okay,
Like,
whatever
and just
idea,
you can have access to it. We're not experts in everything, but we're experts in this space to help at least give you that perspective. That's really great advice.
Yeah.
Take away the trepidation.
Absolutely. The worst we could say is no, which I hate to do. But that's the worst case scenario, right? Chances are we're going to figure something out, right? And at the end of the day, it's going to be, right there in front of you. And you're the only one that can know if it's going to make sense for you. And that's fine if it doesn't, right? But, we can figure a lot of stuff out.
Easy phone call to make, right?
Quicker,
Like
easy phone
reach
call
out.
to make. I'm a really cool guy to talk to, clearly.
Go. Yeah.
So
I didn't even know you had a great Miss Cleo impression.
hey, listen,
Come on now.
it's been a lot of childhood nights just awake.
Yeah.
Thanks again, Adam, for joining us. And thanks, investors. If you're listening, we're here to support. So give us a call.
Appreciate y'all.
Thanks for listening to The Deal Vault. If you found value in today's episode, be sure to subscribe and share with another investor and leave us a review. If you're looking for help funding your next deal, you can always holler at us at loanbids.com. We'd love to help you on that deal. Until next time, keep building, keep investing.